After the first 14 years of the internet's existence, it was only used by approximately 2% of the global population in the late 90s. Can you see the similarities? By the year 2000, the global internet adoption rate grew to 5%. And we have right here, internet users have increased to 5 billion in 2022. 5 billion internet users today. In my mind, those are potential users of Web3 and crypto. And I'm not saying buying and selling crypto, I'm talking about even using some applications in DeFi that are built on some of these networks. His belief is that we hit 1 billion users by 2025 or earlier for crypto, and currently we're at about 300 million users. So that is over a 3x multiplier of users. What's up guys, Kevin Cage here with another crypto update. Hope everybody's doing well. We're going to dive into XRP and some crypto news today, and I hope you enjoy. Okay, let's kick it off. So we have the XRP price chart on the left-hand side, and we have the Bitcoin price chart on the right-hand side, both on the weekly time frame. And once again, nothing I share is financial advice. This is one man's subjective opinion during the depths of this bear market. Now, since Bitcoin's all-time high price in November of 2021, almost approaching 70K, we've been in a never-ending freefall. Months of consolidation, huge crash. Months of consolidation sideways, huge crash. Rinse and repeat. And that would be the same thing for the total market cap of all of crypto, but some altcoins actually created their high back in spring of 21. Even XRP, we've been in a bear market since its recent high in 2021, since spring or April. So if you consider the start of the bear market for some altcoins since April or May, you're talking well over a year and a half now. So a few looks I've shared last year for XRP is this setup. So looking over here for XRP in 2014, we have a double bottom here, and then a huge wick to the downside, essentially a double bottom, then we take off. So I believe XRP in 2014-2015 here is very comparable to Bitcoin back in 2014-2015. Notice, double bottom as well. But what's interesting is that Bitcoin during this rally did this retracement up to the 50% retracement, another crash below the 236, and then we absolutely rocketed during the Bitcoin halving, creating a new all-time high price. Whereas XRP, since its all-time high, actually retraced right around that 50% retracement, very similar to what Bitcoin did all the way back here. So one thing I entertain, and there's no guarantee, is that this fractal is actually drawn out longer. So the way I'm seeing this is right here, these circles, the double bottom for XRP versus Bitcoin, and then right here, as we zoom out a bit, crash, retrace up to the 50% retracement, wicking almost to the 618, and then crash below the 236. Whereas Bitcoin retraces up to the 618 perfectly, candle bodies on the 50% retracement, another crash finding its bottom during March 2020. Once it finally found its bottom, it begins retracing. Once it approaches this 50% retracement level again, this is the do or die, whether it's the 50, whether it's the 618 or the 702. It is reject or break through. In this case, during the Bitcoin halving, we actually broke through, beginning another cycle. And we can see that Bitcoin created two new all-time high prices in the year of 2021, doing a double top at the 3618 Fibonacci extension here and here. So one thing to know, anything is possible in crypto, never say never. We have gaps above and we have gaps below. So looking for open gaps in liquidity that typically do get filled over time, it is one confluence I leverage. And it's not a guarantee, but if I find a lot of confluences in a certain price zone, it definitely leads me to believe that that area is eventually tested. So I know in previous videos we shared the gap at 17 cents for XRP. We also have gaps in the lower 20s. Is it possible that XRP goes to those levels before getting a big retracement? Yes, it is possible, but we also have gaps near this 236 around 85 cents and as high as $1.59. So what does that mean? That means not financial advice, but I personally believe that XRP hits those prices again. And yes, I believe XRP creates a new all-time high price in the future. I've done my research and that is just my personal opinion. If you are a mega bear, that's completely fine. So I just wanted to point out that this part of this drawing right here could be equivalent to Bitcoin in 2020 of March. And you can see this was a flash crash to the downside, recovering very quickly, a V-shaped recovery. But I'm entertaining that we are actually finding our bottom here. Now, could we actually wick, close those gaps, and then get the show on the road? And notice, the last time we had that wick was 17 cents right there, when the SEC announced they were coming after Ripple. So we can see October 2020, we started rallying with the market as Bitcoin started moving, ETH started moving, breaking previous highs, and we can see rallying 200%. Then, on the winter solstice, around December 2020, December 21st, the SEC announced they are coming after Ripple. And that resulted in about a 70% crash. And where did we wick down to? 17 cents. Now back in 2020, I posted this chart on TradingView November 18th, 2020, and this was my expectation. We shared gaps at 17 cents. Notice we started rallying October 2020, started moving up. I thought we were going to reject this 786 at 30 cents and close the gap at 17 cents. And I capped lower staggered buy limits at 22 cents, 20 cents, 18 cents, etc. to make sure I had liquidity to buy any type of quick crash. So this is November 2020 when we're at 30 cents, and I was saying we're going to 17 cents to close an open gap in liquidity. And what did we do? I was actually wrong about the 30-cent rejection. We exploded all the way to the next fib level. We can see my bet was that we were going to reject right here at 30 cents, and we actually skyrocketed all the way to the 4.236 multiple times. Once it got more money in the market, and then boom, the SEC announced they're coming after Ripple, and we can see we crashed all the way down to the 17-cent gap in between these inverse fib extensions. And then people said XRP would never pump, they're getting sued by the SEC, that's not going to happen. But little did they know, typically each Bitcoin cycle, there are huge amounts of capital that enter this market, whether it enters Bitcoin, Ethereum, or other altcoins. This money, some of the algorithmic trading bots that are moving, and this volume can move into XRP. And even from XRP's low at 17 cents during the bull run, it still did over a 10x return. So now in the future, if the SEC or when the SEC comes after other altcoins and other projects because they want their payday, they want their slice of the pie, they're not interested in protecting retail investors. Just remember during bull runs, asset prices can still fluctuate. XRP getting sued still did over a 10x return, so technically this is an 11.5x. So if the SEC came after, Cardano or another project, and I don't want that, I just want clarity, I'd still believe that these alts can fluctuate in price even to the upside. Of course, there's going to be some negative price action because that is just not good news whatsoever. But when the SEC came after XRP, I did not capitulate. Any investment I make in crypto, I know it's risky. I know it has very high asymmetric potential, meaning the risk to reward is insane. If you lose, you could lose all your money. But if you win, you could get a 10x or a 100x return. So I know that in any dollar I invest, if I'm throwing in $100, $1,000, etc. into the market, it is money that I do not need for the next year. I do not need it to pay a mortgage or my car insurance. It is money, even if I am emotionally tied to it sometimes, it wouldn't ruin my life if I lost it. So that is super important. And when I was young and just started, I was trying to get rich too fast. I lost huge sums of money. Anytime I got to my first 100K, I was like, yes. And then I was still reckless. And there's pros and cons to this because if I was a little bit methodical and played these slow and steady, I could be a lot further. But I'm happy I made a lot of those major mistakes early on in terms of risk versus reward or over leveraging, because I'd rather lose 10 grand early on rather than when you're worth $10 million and you lost $1 million. That would hurt a lot more. That is a huge sum of money. So I think it's just so important to learn how to manage $100 or $1,000 before you begin managing 100K. So once again, just to be clear, because I don't want anybody to misinterpret this, looking at XRP versus the Bitcoin price chart, this is the do or die. We're finding our bottom, and we can have a liquidity in this market. We've had a variety of black swan events. So let me explain. With the Luna debacle, the Terra Luna debacle, and their stablecoin UST, once it began crashing, there were huge sums of Bitcoin that were sold. When huge sums or billions of dollars of Bitcoin are sold or even liquidated, what does that do to the crypto market? When Bitcoin goes down, altcoins go down. When altcoins go down, there might be some funds that are over leveraged. They might actually have to sell more of their Bitcoin. So it creates this never-ending death spiral. And then markets dry up. So what does that mean? I'm referring to the overall market volume. So I shouldn't be using CoinMarketCap, but just talking about the 24-hour volume right up here. During times of huge market crashes, markets dry up. During FTX recently, it crashed. Crypto volume went down, meaning that there are less buyers and sellers buying and selling at a variety of price points. So the market dries up. Now, when the order books dry up and there are less buyers buying at all of these price points, there's less depth of liquidity. There can be huge amounts of slippage, and that's where some of the crazy wicks to the downside can actually occur. So never say never. So on Investopedia right here, let's look at a quick order book example. So right here, we can see on this side, we have the bid or the buys. This is the green, and we have the asks or the sells. So the bids are the buy offers. They are offering to buy 16 units or 16 shares, etc. at a price of $13.45. So that is the highest buy offer. We can see other buy offers below at $13.41, and they're trying to buy 30. So we can multiply this price, $13.45 times 16. So that buy offer or that bid is $215. You can go through this and calculate how big the order book is and how much money is actually in it on the buy side and the sell side. Now the same thing for the sell. This is the ask. So 1380 times 20 tokens. So that's $276. So what you'll notice in the bids, the highest someone is willing to pay is $13.45. On the right hand side, the lowest someone is willing to sell it for or ask for is $13.80. So we can see that is a difference of 35 cents. So that spread is 35 cents. Now when markets are very liquid and there are tons of buyers and tons of sellers willing to buy huge amounts of tokens or shares at a variety of price points. So instead of $13.41, there'd be an offer at $13.42, $43, maybe $13.45, maybe $13.50, maybe $13.52. There would be more offers at almost every single price point possible. That would be more liquidity. That would mean this specific asset that they are trading, buying and selling, is pretty liquid. There are buyers and sellers at a variety of price points, and there's also a lot of depth within the order books. So a variety of price points, and then also the units are quite large. It's not just, a single unit at $13. It's 16, it's 50, etc. In this case, over 43,000. So the benefit of more liquid markets, more buyers and sellers at all of these price points in larger sizes means there's a smaller spread. So if the ask was $13.50 versus $13.45, the spread is now only 5 cents rather than 35 cents. What does that mean? It means the market is more efficient, which is a good thing. It is cheaper to use as well. That could also attract more buyers and sellers to make it even more liquid and more efficient. So when a specific asset, XRP, Bitcoin, etc., has more liquidity, it can be used, for XRP's case, as a bridge asset to send more value. So if there's huge order book depth and liquidity, say the total buy offers and sell offers equaled $1 million. That's not that much. If you have millions upon millions of buys and sells, you might be able to send $1 billion in a single transaction. So the more liquidity, the more volume, the larger amounts a token can sell. And of course, if XRP's price is higher, let's say $5 or $10, that means it's a much higher value as well. Therefore, more value can be sent per transaction, making it more efficient. So during the Sam Bankman-Fried debacle, and I'm sick of talking about it, for FTX, things dried up. All of the buyers and sellers disappeared. Maybe there'd be a buyer at $13 and the next bid would be at $7 because they were very nervous that the prices would go lower. They were not willing to potentially overpay for an asset. So when those things dry up, if somebody bought at $13 and then it's bought, the next buy is $7 and no other buyer comes in to buy higher than that, eventually a seller would become impatient or nervous and scared and sell their asset at a huge discount to the next willing buyer. So therefore, you would see the price go from about $13 all the way to the next buy or the last traded price of $7. There would be a huge gap in liquidity, and you'd see crazy flash crashes. Now, sometimes it could be bought up right away and a huge recovery because there's arbitrage, people take advantage of those opportunities. But if there's more fear, markets dry up even more. So remember, XRP already has exchange delistings and things like that, but no, RippleNet has a $15 billion annualized run rate and over 40 payout markets for on-demand liquidity, which is XRP. So when I see a project that is continuously building, they have millions of dollars to survive the next few years. I'm honestly not worried, but that is just my opinion. Please decide for yourselves. So that's an example of crazy liquidity events where order books dry up, the buyers are just not stepping in the market, the sellers get nervous and they begin liquidating, and that's where we can get those crazy flash crashes or wicks. Bottom line, we are waiting for a bottom. We are waiting for this bear market to be over because I believe we retrace, if not do a blow off top in the future. So I'd be looking at that 50% retracement again, similar to Bitcoin after the halving right up there. We have gaps at 85 cents and $1.59. So I'm personally content with waiting. I will dollar cost average if we go lower. I don't really want to pay 35 cents. If we do any type of big crash, I will. The reason being, I'm buying other alts right now like Algo, and it looks absolutely terrible, which is why I'm buying it, is because, XRP for this year, we're still up 20% from its June low. There's other alts that are just crashing bad. After Algo with the whole FTX situation, it's creating a new low. It is hideous. I don't think many people are buying it. But me personally, I am. I know Algorand, they did overall funding of 300 mil, and I'm taking the chance and I'm confident that it will recover in the future. We can see back testing all the way down to that previous wick. And my buddy Chris did show me some gaps at lower levels at 14 cents. So anything's possible. Never say never. We're just gonna have to wait and see if we get very illiquid and keep crashing. But overall, I'm taking the chance that we retrace hard because everything I bought during the 2020 crash, that was the easiest money of my life. So I'm not saying XRP just copies and goes, right to $10, $15. What I'm saying is we have to wait and see, close these gaps, and see if we can break through that 50% retracement around $1.70. And if we can, we battle through the rest of the retracements, challenge the all-time high, and we get that show on the road. And, we can speculate with the lawsuit in 2023 coming to having a positive outcome, what that means for the Bitwise index holding the top 10 assets, and XRP still in the top 10, so it would be a huge buy pressure. We could speculate about the next Bitcoin halving in 2024. And typically during that period, we can see during each Bitcoin halving every 4 years, there's typically a multiple 100% run up or an increase before the halving. Whether it's 100% or 300%, and a 300% increase is a 4x. And if you think it's going to be diminished returns, I mean, heck, even a 2x from here, that would be nice. 34K Bitcoin, and that would bring alts up as well. So there's a lot of catalysts. There's a lot of things that could bring money into this market. I know it's super dark right now. This is the Bitcoin monthly time frame, and this is the lowest the momentum for Bitcoin's monthly RSI, its relative strength, has ever been, right here at 40. Now in previous cycles, after these purple circles, the Bitcoin halving, we typically run up big. Notice when the RSI pierces up here, oversold, that is the market top. Oversold, market top. Oversold, market top. Where are we? We are finding our bottom. So for me, I'm looking at it like this, comparing us to the 2015 low or even the 2018 bottom. Meaning that in the future, I'm super confident in crypto, and that is just my opinion. So whether you're super bearish, all good. I completely understand it because I definitely sometimes get bearish and worked by the market. If you're super bullish, all good. We have gaps for CME gaps of the futures for Bitcoin under 10K. Could we do a crazy wick to the downside? It's possible. Could we do a retracement like we saw 2019, 2020? Absolutely. Or could we do a blow off top and break through our previous 69K all-time high? And the answer is yes. And the next Bitcoin halving is approximately March to, I'd say, May of 2024. And historically, we run up before that. And a few things as well regarding like wicks. So like ontology, this is an example because I'm not trying to create FUD, guys. I'm just talking about examples of gaps in liquidity. Look at ONT. It did a crazy wick, ontology, US dollar on Binance, and technically it went basically to zero. This is a flash crash, and technically this would close any gaps back here. And gap theory is no guarantee, but it's definitely another confluence I keep an eye out. When I find a bunch of things at a specific price zone, it's definitely interesting. And no matter how bearish you get, all good. I just believe that we do in fact create another all-time high in the crypto market. 3 trillion is a drop in the bucket. I think that in the future, we're going to say, wow, this was so obvious. Why were we so afraid at the bottoms and we're so greedy at the top? I just believe artificial intelligence and the markets are very, very smart and they know how to work us. And this video is long, so I'll do some more XRP information in the next one, but I just want to finish off emphasizing that for adoption, we are in 1997, 1999 versus the internet. And people think that's crazy, but we really are. Bitcoin's been around for just over 10 years. That is nothing in the scheme of things. It's currently used by less than 2% of the world's population. This is roughly equivalent to the number of people using the internet in 1997. I know we showed that interview of Bill Gates in 1999. You know, even on, I think someone was on the Letterman show explaining the internet, explaining email. They didn't understand a network of networks. It sounded crazy. And that's how it was for me, even in 2013 when I first heard blockchain and Bitcoin. And unfortunately, no, I didn't buy Bitcoin then, but I knew of it. As the uptake was very slow from its introduction in 1983, forecasts were often pessimistic, dismissive, and ultimately incorrect. After the first 14 years of the internet's existence, it was only used by approximately 2% of the global population in the late 90s. Can you see the similarities? By the year 2000, the global internet adoption rate grew to 5%. And we have right here, internet users have increased to 5 billion in 2022. 5 billion internet users today. In my mind, those are potential users of Web3 and crypto. And I'm not saying buying and selling crypto, I'm talking about even using some applications in DeFi that are built on some of these networks. The chart below compares the growth of the internet from 92 to 2006 to the actual crypto adoption from 2016 to present day 2022, and then projected adoption from 2022 to 2030. In Raoul Pal of Real Vision Finance, ex-Goldman Sachs, this is a guy I highly respect and I really appreciate his insight. His belief is that we hit 1 billion users by 2025 or earlier for crypto, and currently we're at about 300 million users. So that is over a 3x multiplier of users. And of course, there's going to be central bank digital currencies. I'm not a fan, but we've explained in previous videos the differences and certain roles of central bank digital currencies, stablecoins, and then actual crypto assets. There are pros and cons of each, and I believe that each has its place. Even though I'm not a fan of central bank digital currencies completely destroying our privacy, I think it's happening with or without us, and I'm going to try to do everything I can to make money for my family in the crypto market. So we have Raoul right here. The crypto space is growing at 113% per year in terms of users. Even if it slows down to 63% growth rate of network adoption the internet saw at the same stage, it's going to lead to 4 billion users by 2030 or earlier. So 2030 is about 7 years away, okay? And current crypto users is about 300 million users. So 4 billion users potentially by 2030 divided by 300 million today. That is a factor of 13.3. That means the market could grow and multiply by over 13 times in the next 7 years. Now looking at the total market cap of all of crypto, remember 2030 is all the way over here. Assuming that we even stayed at the bottom of this range, at the bottom of this channel in 2030, that could get wild. We're talking tens of trillions. And keep in mind, we're back to 800 billion. That was the previous high during the last cycle, 2017, 2018. We topped at 800 billion, crashed, then went up to 3 trillion. So we're talking from this high, we went 3 times higher. So even if we grow slower, we're at the bottom of this range in the next 7 years. Yes, I believe we surpass 3 trillion yet again. We go to 5 to 8, 10 to 12, etc. I'm saying 10 to 12 trillion dollars market cap. And some people will say, man, we're going to 50, we're going to 100 trillion. It's all the money. Anything is possible. Incredible Crypto right here just emphasizing the market cap of the space today, guys, is less than 1 trillion. The all-time high was 3 trillion. Global equities, the market, has a market capitalization of over 100 trillion US dollars. We are less than 1% of that as well. So he's just emphasizing the money can come from a lot of places. People still don't realize how small this space is, and the majority of it is Bitcoin. Bitcoin has almost 40% of the dominance. Ethereum has almost 20% of the market dominance. That's almost 60% of all of crypto is just Bitcoin and ETH. There is incredible upside for alts that actually survive, and there's also huge amounts of danger for those that don't. So Credible Crypto right here just talking about $100 trillion for US stocks, bonds, etc. Real estate is over 300 trillion. We have derivatives, 600 trillion, all the way up to like 1.2, 1.4 quadrillion. There are huge sums of money, especially when our governments print it infinitely. So you don't have to have crazy moon targets, but definitely just be open to anything happening. Keep in mind, we are less than 1 trillion versus all of those numbers I just said. And last but not least, linked in the YouTube video description, this is a platform I've been using for almost 3 years now. This is iTrustCapital. It is 100% free, as you can see pricing, and this is for a crypto 401k or an IRA. And I leverage a Roth IRA for 0% capital gains. It has a mobile application. You can trade 24/7, 365 on your PC or from your phone. And if you don't like the counterparty risk of stablecoins, you can also hold some of your funds, if not all of it, during times of volatility in US dollar directly, which is a great time for me to sit in US dollar, reassess, and then begin DCAing back into the market. So you have complete freedom of your funds, and a Roth IRA in the crypto market is 100% tax-free. So once again, this platform is completely free. There are no monthly fees. There's just a 1% trading fee if you decide to trade. Also have gold and silver and dozens of crypto assets, as we can see. And if you use my link down below in the YouTube video description, you also get $100 after funding your account, and you can start with as little as $1,000. Hope you enjoyed this one, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate hitting the like button and subscribing. Let me know your thoughts down below. And as always, my link tree is linked right in the top of this YouTube video description with all links, crypto resources, and discounts. I'll catch you in the next one.